Well, thanks very much, Paul. And it's great. This is our first time presenting here on the Gold Coast. It's great to see the amount of investment opportunities here that's coming on the market or in the market, and also great to see the amount of investors here today looking at opportunities. I realise that I'm probably one of the last things standing between you and a shandy, so I'll do my best to keep on point, on time. Usual disclaimer. So for those of you who don't know who Austral are, we are a Queensland copper mine, 120 kilometres northwest of Mount Isa. We're based right up in that, we're up in that hub of that base metals district. There's just absolutely great opportunity moving forward. What makes Austral different to a lot of the ASX copper plays on the market, we are one of the only producing copper cathode mines here in Australia using an SX-EW processing facility. So with $23 million cash at bank, we're in the process of just pulling on our mining campaign in the form of Anthill. When we listed in November, we didn't need to raise cash or capital for infrastructure. We've got it. We've got a $160 million processing plant. I've got a short video here. There'll be a lot more videos and a lot less of me talking and a lot less graphs. So this video you can see here is of our facility. So this plant here at full tilt can do 30,000 tonne per annum, and that's what we're leading into with Anthill. Here's our heap leach facility, 1.6 kilometres in length and 40 metres high. Our crushing and agglomeration circuit. So all our action happens in there and follows a conveyor belt across to our heap leach where it starts its process. We have a 150-man camp up on site. I think today we've got 111 guys currently on site. So quite a big asset, and as we're leading into Anthill. You've seen the size of that plant, you can understand the sheer enormity and size of the facility in question. So as Anthill comes online, we're not only a producing asset, we've also got 2,000 square kilometres of wonderful tenure, and our focus is entirely on increasing our mine life from that 4 years. The other thing that makes us quite unique is that we are a pure copper play. Snapshot of Anthill. So we listed in November, and our focus was entirely on getting Anthill into production. Mid-November, we announced that Thiess would be our mining contractor for Anthill. December, we put a blast through Anthill, and Thiess started mining just after Christmas. Australia Day, we hit our first ore, which was quite patriotic considering we'd just listed on the ASX. Anthill, what does Anthill actually mean? So we're going to do over $500 million worth of revenue over the next 4 years. Free cash flow, we should be sitting at around $250 million by the end of it. So Anthill itself is our complete opportunity to extend. So we're a self-funded exploration opportunity ready to go. Anthill. So I've got a short video we'll play here of our mining campaign. So Anthill is split into an east and a west pit. Now a lot of people probably don't understand the entire process and what it takes to make copper. So I'm going to take you on a journey as a tonne of ore. So each one of these trucks that's getting loaded carries around $20,000 worth of contained metal. To date, Thiess have mined 7.5 million tonnes since January. So they're well on track. They're doing a great job. Our Anthill ROM, which is situated 44 kilometres from our processing facility, we will keep 5,000 tonne of ore sitting there just to avoid if we've got any mining delays, so we've got that safety net there. These road trains get loaded and they start their 44-kilometre haul back to Mount Kelly processing facility. Again, what's great for us, we've got a bitumen road the whole way, which helps de-risk us during that wet season. And we do have a very big wet season. Each one of these road trains is carrying around $14,000 worth of contained copper. At 40 trips a day, they're moving around $500,000 worth of material daily. Here we are, we're getting loaded into our crushing circuit. So we've recently done a refurbishment. Part of our raise was we did a $2 million refurbishment on our crushing and agglomeration circuit. Here it all gets crushed up and then tracks, it's about 1.1 kilometres via conveyors. Great footage of it here, tracks along, and as we get up to our heap leach facility, you'll see our radial stacker spreading it out there where it then gets irrigated again and starts leaching. So inside the first 60 days, we recover 60% of the metal and 85% at around day 270. So you can see it there getting stacked. The guys will get up there, they'll put irrigation up on there, and we're starting to see Anthill revenue virtually immediately from the minute it starts leaching. So here's our robots stripping off our plates. So that's 99.9% pure LME grade copper cathode. And Glencore's our offtake partner. I get loaded onto the back of a truck, I head to Townsville, and I become the property of Glencore. Anthill production profile. So as I mentioned, we've started our mining campaign, we've started processing our ore, and you can see how very quickly we ramp up. So July, 800 tonne a month. August, we're over 1,000 tonne a month. So the two lines I want you to look at are the fourth from the bottom and the bottom line. As you can see, in an accumulative revenue stream or sales, next financial year, we'll be doing somewhere around $180 million worth of revenue. And again, with a C1 cost of 7,200 AUD, it certainly leaves a lot of margin in there for us. Capital structure. So market cap as of today is somewhere around 250, 270. As far as our cornerstone, most of our big guys are still in there. As far as our holding, my team and myself hold a large portion of shares, and we're very committed to seeing this asset really continue growing the way we have in the last month. We've had a great last month. I believe that as we've got online, as our each milestone we've hit, we've de-risked a little more. So now we're sitting with cash in bank, and we're about to spit out $14 million a month in a revenue stream. So I guess that's our Anthill component. That's what's generating our cash. And the next part of us is our exploration, and that's really exciting as well. We've got a four-pronged attack that we're working on. So we are an oxide mine, right? So Anthill itself is an oxide potential. So we've got four things that we're working on. One, Anthill 2.0. So in and around Anthill, and I'll show you the areas that have got my team pretty excited. The second area is also increasing our oxide opportunities. And we're really focused inside a 50-kilometre radius of our processing facilities for commercial reasons. We've got 120 target areas in total, and I'm going to talk to three of them when we get to the next couple of slides. Our third prong is monetising our very large sulphide opportunity. And and then this morning, we put an announcement out that we recently did another joint venture with Glencore, and I want to walk you through why we're so excited about that, but also the opportunities that we'll present from that. Prospect timelines. This is a pretty busy slide, and I'm mindful of time. But in short, come and grab us afterwards, and we can chat to you about this over a beer. But in short, I think 3 weeks ago we put an announcement out that we intend to. We've allocated $10 million to our exploration budget over the next 12 months, and our goal is to do 25,000 drill meters. So, yeah, we're really going to have a red hot crack at this. Anthill 2.0. So the areas that have got my team fairly excited are that, so the blue outlines you can see there, the Anthill East and West pit, as you saw in those videos. All the blue speckling dots were existing drill holes. And the areas that have my guys fairly excited are the north, the northwest, and the west. There's been very little exploration done on that. So that's where our first part, where we're heading to. Great mineralisation in through that area. So the second phase of what we're working on is increasing our oxide. I mentioned, I may not have mentioned, but our plant is only working at a third of its capacity. So we're doing 10,000 tonne per annum. That plant's capable of 30,000. So the first thing we need to do is find some, and I heard Simon mention feed the beast. You know, we've got to do exactly the same thing. We just want to put some more volume through it. Now, some of the opportunities we've already got are not as impressive of some of the results I've seen here in the last day or two. They're low grade, but for us, they make it really sexy because it's that ability for us to put more feed through the plant. One of which is within a 2.5 kilometre radius of our facility, and it's virtually on surface. So I'll talk to you on that. So the couple in question, we have a McLeod Hill, again low grade, but it's very close to surface, very close to plant, to our processing facility. And we've committed a 2,000 metre drill campaign. In fact, the guys have got drill pads prepped, ready to roll. The second one I want to sort of walk through with you is Dividend, and we've got a slide following very shortly on it where I'll walk through it. Third is Drifter. This Drifter's a little more exciting for us because it's higher grade, but it's also on an existing ML, and that really has my team pretty fired up and ready to go. We're committing I think from memory, a 3,500 metre drill campaign to it, and again, starting pretty much immediately. The third one is Lady Colleen. Now it's sulphide, but it's got so much potential, and I guess that's where, again, our opportunity is, being the fact that we are producing cash. There's certainly a lot of upside moving forward for us to monetise some of those opportunities. Dividend. I mentioned earlier, it's a large geochemical anomaly close to the facility, and it's basically at surface. It's open in both directions. The goal, what the guys are planning on doing is in drilling. So that's kind of what they're working on in the next probably 3 weeks. So I mentioned sulphide. So we have a very large body of sulphide. In fact, 330,000 tonnes of contained copper in a JORC-inferred mineral resource. Now, keep in mind, we've had very little value attributed to that at this point. So our focus is how can we monetise that? Now, I don't have enough time to show a very short video, but there's an organisation in the US called Jetty Resources. What's got us really pumped about Jetty is that they've been able to treat sulphides using an SX-EW processing plant. So basically, there's no capital required. If this test that we're currently undertaking works, we can process our own sulphides on our existing facility. Now that's a complete game changer. Now the things, again, a couple of the things that Ed in the video would have spoken about is chalcopyrite is the species required for their process to work, and we've got that in spades. So yeah, we're super excited about that. Lady Colleen. Again, this is one we put out on Monday, and I guess it wasn't probably more an announcement, it was more just keeping our investors across that we are working behind the scenes. Not only on getting Antil into production, but my team's peeling into this. Again, what's really got the guys very excited, so we've recently done, we've had a diamond drill rig in there taking samples. What we're doing is we're lifting that cutoff, and we're probably going to lose a few tonnes across the board, but it will just pump our global average because we've got up to 4% in through some of those areas. And I am running out of time, but I mentioned Glencore. I want to talk to you about the announcement we put out this morning with Glencore. So we recently we put this announcement out this morning that Austral is in fact doing a JV in relation to 300 square kilometres of our tenement package. But what I really want to draw your eye to is the yellow area kind of in the middle. is part of our existing mining pits where there's been 90,000 tonne of copper mined over the past 15 years. Now take that into consideration, you know, we butt right up to Glencore's boundary on some of those pits. So the deal that we've done is $6.3 million to be spent over the next 4 years. Key points to really take away: any oxides found on our tenement remain our property, solely ours. Any oxides found within Glencore's, we'll do an earn-in. Any sulphides found will retain 35% ownership. Now, just to be clear again, that's only on future discoveries. So it's not across what we're already doing, it's just in that area, and it's just on future discoveries. So rest assured, we're not giving the farm away. 43 seconds, key takeaways. We are a producing copper cathode mine. We make a metal. 99.9% pure LME grade copper. In fact, I didn't say it, but you know, Glencore, who we did our offtake with, we get a $70 premium above LME pricing because of what we make. It's such a good, high quality product. So we are a producing copper mine. We are self-sufficient with cash. You know, we're going to make a lot of cash in the next 12 months. We intend to put that in the ground and extend our resource, and our focus is not only on our oxides, but also on our sulphides. If we can learn how to monetize our sulphides, you know, that certainly using our existing infrastructure without having to raise any more cash, complete game changer. Thanks very much. AR1, ticker AR1, load up, go Queensland.